You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time to rock out with your usual cast of characters. Yup, it's time for the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Hope you guys are liking the new time here on the old OB, noon Central, 1 p.m. Eastern, every Monday and Thursday. You can get it usually pretty much whenever, except for next week. We'll get to that in a little bit. Noon Central, 1 p.m. Eastern, live via Mixlr, MIXLR. Grab that link, set it and forget it. Join us live. Ask us questions. Maybe you got a product you'd like us to talk about here on the show in terms of, a name. It could be, your stock, your crazy pink sheet stock you like to trade. Maybe you see options flow on something. You say, what's going on with this? Hit us up. Let us know. Or you got a question in general. You guys like hitting us up. Send it over there. The live way is the best way to get it answered quickly. Some people like to use, the other means to get questions answered quickly. And sometimes we don't get a chance to get around because we don't have shows every day, obviously. So sometimes it takes a little bit longer to get to those. But if you ask them live, we try to filter those, bubble those up to the surface. And of course, you can still get them as usual everywhere else. And it's nice, a little bit earlier show means you guys are getting your option block same day, which is kind of nice. I know a lot of you like that thing as well. Don't have to wait as long for your podcast. So check it out wherever you're getting your podcasts, your pocket casts, our website, theoptionsinsider.com, or via any other platform of choice. We don't judge as long as you listen. We don't even judge speed. Someone told me the other day to listen to us at 2x speed. I say, you know what? That's fine, because then you get twice as much of our shows in. I may sound like Mickey Mouse to you, but hey, as long as you're cool with it, I'm cool with it. So check it out, listen, enjoy, and send in questions. We'd like to hear from you guys. And joining me on the program today, let's see, who do we have? Let's spin the old wheel. First, we land on the sleepy hamlet that is St. Charles, Illinois, where we are joined by none other than Uncle Mike Tussaw from St. Charles Wealth Management, a.k.a. the place with the fox. Mr. Uncle Mike, welcome back to the show, sir.
Loving life here on the noon option block hour.
You are a big fan of the noon hour. I will say, for me personally, it's a little bit harder to get the shows together a little bit earlier in the day because we got so many of them. But I'm glad you guys are enjoying it. That's all that matters, sir.
You're all heart, Mark.
I live to make Uncle Mike happy. That's what I do here at the end of the day. And you're right. By the time 2:30 rolls around, I'm done with Twifo, I have a cigarette and I relax. I'm just kidding. I don't smoke, but if I did, I probably would. All right, and also moving on a little bit farther east and a little bit farther north, all the way out, just about to get to the ocean. If you get to the ocean, you've gone too far. Dial it back about 5 feet to the coast there, and you'll come upon the Giovinazzi compound, where we are joined by the one-eyed rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show, sir. How go things in the land of Maine?
Me and my one eye are quite happy to be here.
I was just talking to your neighbor there in New Hampshire a few shows back, not too long ago. So we're getting a whole tour of the Northeast here on the network this week.
Well, I think I heard that the biggest option penetration in Google is in Maine, isn't it? And I can't believe it's just all the content I produce.
You got to be at least 30% of that, right? That's got to be you. Who else is churning out the volume of option searches that you are on a daily basis up there in Maine? Nobody. There literally can't be anybody else. So it has to be you.
I want to do one of Tucsaw's option clubs here once a month and see to see actually who comes out of the woodwork.
And
literally,
because Google weights it per capita, every one of your searches counts like 100 of mine. So you are a mighty force in the world. You should start using your influence for good. Start saying, hey, here's what I want. Here's the products I want. Here's what I want. I want after hours trading, because you speak with a mighty voice. You wield the mighty hammer up there in Maine as the one guy who likes options.
Well, I'm relatively large. I feel now I'm relatively large.
You're big. You're big time. Let's see how much big time can impact the market. It is time to dive into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. This is indeed the portion of the program where we break down what's going on actually live right now. Noon Central, a little bit past noon Central here on, Monday, August 20th. Actually, Thursday, August 23rd. The day after the best day of the year, August 22nd. I won't say why. You can probably guess. But let's move on to what's lighting it up here on our old tape today. Kind of a mix of things. It's kind of interesting. Another kind of mixed day on the street. The street's kind of looking and saying, well, another salvo in the trade wars. You got China firing off again today, upping the ante, implementing tariffs on a second tranche of goods, including oil products and coal, for the first time there. So the market's kind of saying, And then we also have, of course, the growing concerns or perhaps interest, depending on which side of the aisle you are, in impeaching Trump as a result of all the continued convictions of his inner circle there. And the market looks at that and they say, And right now we're kind of in that phase with most of the major indices unched slightly to the upside or to the downside. VIX cash was taken on the chin earlier in the session, got down to as low as about 11.65. It's gotten pretty much all that back now, kind of unched on the day right now, right around 12.25 or so. So we were in the easing of volatility mode. Now it seems like things have firmed up a little bit as people are starting to perhaps digest the economic news going on out there. So I'm going to talk to him a little bit. We'll start with you, Mr. Rock Lobster. What's catching your eye? What's going on in this land of all things
Well, I think we traded the 11 handle in VIX again today, which is, of course, hugely exciting for the 3 seconds that it was there. Volatility is, I think, to be honest, I think this is all very underpriced. Now, SPX weekly vol, the at the money vol is around 7.5%. And we've been actually doing, I think, a little better than that, sort of on an average true range basis, to use that word. So even this morning, like the Qs were up. I'm not going to say they're up 1%, but pretty close. Let's say a good solid 0.5%. So I think there's parts of the market that want to get going and sort of race out of the gate. But this kind of, this China trade thing is keeping everything from really making its move. I do think if the U.S. and China can come to an agreement, we actually it'll kind of be off to the races. I think you'll see you'll be definitely a short-term explosion, because like every morning it's like the market wants to rip and then it gets tweeted sort of back into its hole. And then we've had the president stuff. So I don't know, what that's going to end up being. It looks like if that's all they got, I don't know if it's enough. But either way, that was probably responsible for a little bit of the minuscule vol pop we had this week. But as of right now, I mean, everything is very much it's very much it's literally I really feel like the vol is saying we're going to wait and see what happens, but there's not a huge bid for it. So it's again, I'm like, wait and see. It's all I can say about that. It's not hugely exciting. But, sometimes not hugely exciting. It's not great for the radio show, but that's sort of the observation. And VIX can't really get off the ground. It's up 7 cents after the index was, everything was looking pretty rosy this morning. So we're kind of stuck there. I will mention, though, I think the last time I looked, let's see how they're pricing it now, is, yep, so it's coming a little bit, but this morning the futures, VIX futures themselves didn't really move down a whole lot when VIX started falling apart. So I think, again, those futures are doing a wait and see. I don't know how long the current China-U.S. talks go. What are they supposed to be, 2 or 3 days? If anything comes out of it that's even remotely positive, I think it's kind of an off to the races, and I'm looking at SPX 2900. So Tusaw can say his famous phrase. There you go.
Uncle Mike, are you ready for your famous phrase? And what else is catching your eye in today's market, sir?
I was hoping I could say my famous phrase today, but we kind of pulled back. We hit the all-time high, a couple days ago, and I was actually hoping that we could say it today, and I was hoping we'd close at an all-time high on yesterday being the special day, which is, of course, Mark Longo's birthday. So happy birthday to Mark Longo. Make sure that you guys tweet and write into Mark and wish him a very happy 28th birthday. So
I didn't say it was a birthday. I just said it was a very important day for the Julian calendar. That's all I said. I didn't imply anything else beyond that. I don't know what you're inferring, sir.
So I got inside information that was just sent to me saying it was your birthday from a very reliable source. So it's Mark's birthday, folks, and wish him happy birthday for sure. So anyway, with that, I'm going through the markets in terms of the sectors and where we're going. There's really not a lot happening today. We went up a little bit at the beginning of the day. We're down a little bit right now. So there's really not a ton to report. I would kind of agree with Andrew in terms of this is very much a wait and see market. We're right on the brink of all-time highs. And we couldn't quite break through the door, so to speak. And with that being said, I shouldn't say it. We broke through the door. We went through the door, but we kind of went back on the other side of the door. So we're below the all-time highs again. We could not close at an all-time high the other day. So with that, it looks to me like the market is waiting to see on a bunch of things of what Andrew said. And on top of that, we're still in the summer season, and it's going to be interesting to see what happens after the Labor Day weekend. So a lot of times this time of year, there's not a ton of volume, but there will be in the next couple of weeks, I'm thinking. So we got probably another week of not a ton of volume unless there's a lot of reason for a lot of volume. And we are right on the brink of all-time highs. So I think we're very much at what could be a very exciting September, either to the upside or the downside. My bias is up, but it always is, of course. But the main hurdle right now from a technical standpoint, I feel, is that we have to break through these all-time highs again with the SPX at 2856 on my real-time quotes right now. And with that, we actually need to get through the 2873 mark, and that's the all-time high. So I think once we get through there, we could be off to the races in September, or this could be a stiff point of resistance, and everybody will be very poor in September if that's the case and Trump gets impeached. We'll see.
Yeah, he did threaten it was going to derail the market, right, if he got impeached. And all that talk means the market kind of just goes, we don't care. So got a lot of market shrugging its shoulders for the most part on a lot of this news. Looking here to earnings season, we are kind of coming into the quiet tail end here of earnings season. Got a few names popping off after the bell today. Got HP, Intuit, and Gap. So if you're into retail or tech, then you got some names coming out here after the bell today. Yesterday we saw Target coming out before the open, and they actually looks like they had a pretty decent little pop there. They closed going into earnings at about 83 and a quarter, and they got up the next day as high as 88.89. So about a 5 handle and change move. Let's see if I can pull up the ORATS report, if it's on here. If they have Target on here, I don't see Target on here. Here we go. Target. Yes, they were pricing in about $3.93. So they exceeded that pretty well to the upside. Today, kind of coming in right at pretty much settling in right about the extent of that range today, about 86.76, up about 1% or about 82 cents. Sounds like Target probably trying to fill that void left by Toys R Us. Toys R Us went away. Not a lot of places for kids to go and try get their hands on toys. So I think Target trying to expand their section as a result. And, because they're not totally reliant on toys for their profits, they can actually maybe make money at it. They sell a lot of other things to make up for any shortfalls they may make in toys. So apparently the market liking that. And some other news as a result. Speaking of other news, I don't know if you guys noticed this, but it was kind of interesting. Actually, there's been a lot of back and forth going on in the Journal, coming in about some dire things about the options industry and the Gungeon going after OCC quite a bit for their capital plan and a bunch of other stuff. And it seems like our old buddy, Mr. Russell Rhodes, is taking it upon himself at the Tab Group to rebut some of that, apparently, with his latest research, which is called, despite what you read, the options industry is doing great. I won't bore you with all the stuff coming out of the Journal about the capital plan at OCC and everything else. It's kind of dense inside baseball stuff in the world of options, but a long story short, OCC used to be kind of a not-for-profit public utility. Now they've kind of changed their capital plan. They've raised a lot of money from 3 major exchanges, CBOE, NYSE, and NASDAQ groups, and now people are feeling that other exchanges and some trading firms are kind of maybe rightfully angered that those exchanges have a bigger seat at the table than others, and they could hurt things. And the old egalitarian nature of utility is gone, and some people are thinking that's going to threaten volumes as well. Mr. Rhodes, as in his new role as, I guess, industry evangelist for Tab, says industry has never been stronger, as indicated by the increased volumes as well as an improvement in liquidity across the market. Let's see here. He's got some other notes here. Kind of slams the article as old news, which it is. The capital plan. I was kind of surprised to see the OCC, the Journal, writing about this now. They're always, let's say, a year and a half late to the party. That's kind of the case here. This was a big brouhaha quite some time ago. I haven't heard anyone really up in arms. Not a lot has changed in that space, but the Journal apparently has just discovered it, and the lawsuit that's going on as a result. So we got Russell, interestingly enough, coming to the aid of OCC, talking about the credit rating of OCC and their plan to boost dividends for their shareholders. Let's see, Tab Group estimates options volume on track this year to exceed 5 billion contracts for the first time ever. He also says the average bid-ask spread was 0.22 in July, has narrowed each month since the market volatility in February. Last time markets were this tight was in September of 2013. So his bottom line is the options industry is growing. Quality of markets is favorable for traders. And OCC is one of the most financially solid entities in the United States. So there you go. Mr. Rhodes carrying some water there for OCC. I don't know, Mr. Meatball, I won't have you chime, or Mr. Rock Lobster, I won't have you chime in on all the behind-the-scenes nuances of the OCC and the back and forth with the Journal and the capital plan. You guys can all go read that stuff if you want. It's a lot. It's pretty dense. Let me just warn you right now. But if you just want to read about Apple options, unusual activity and stuff, that's not the articles for you. But that said, I don't know if you've been following this, Mr. Rock Lobster, but Mr. Rhodes weighing into the fray here. Now that he's outside the CBOE, he's kind of Mr. Industry options evangelist. What say you to that, sir?
Well, I have a pet theory about the SEC. They only really regulate stuff they can regulate. So, you think about it, in the Volpocalypse, did really any option clearing companies blow out? No. Clients lost money, but I don't think any option clearing companies blew out. Option firms, you might have, hedge fund or two might have gone down, right? But the clearing mechanism worked fine, right? But other SEC regulated entities like, ETFs, okay, some of those blew out pretty big and investors got hosed. I think the OCC is actually more like a model of how the derivatives over-the-counter industry should clear, because it's a third party, meaning the third party forces everybody else to put up margin, which has worked pretty well in most market crashes the last time I looked. So, the fact that, the OCC is, maybe somehow getting the SEC upset, they really should be looking to the OCC as a model for clearing all of the multi-counterparty derivatives contracts that there are, because it works. You know, why do you want to mess with stuff that works overall? I mean, they have pretty stringent margin requirement, which is what I think all banks should have, and all trading firms, all hedge funds. And the third party basically keeps them honest, right? Because you have the third party there, the OCC filling in that role. So I find it odd that the system that actually worked in the Volpocalypse, which was the OCC function, is the one getting all the ire directed at it. And, you know, and who are the people that are suing the OCC? Like all the rich trading firms that are all getting bent out of whack because, you know, they're the ones where the money actually makes a difference. I don't think it's going to make a whole lot of difference to the average retail investor, but, you know, to firms that actually are looking for, you know, that might be a part of their dollars. That's a whole different story, right? So again, I think this seems to be somewhat politically directed by big firms, and they're a little bit grumpy. But ultimately, with how the OCC functions, it seems like it functions fine.
Yeah, it is. It is kind of interesting. You know, we brought that point up before that, you know, there has been a lot of ire directed to that, and you could certainly, you know, I could see how some people would take issue with the capital plan, and it does kind of create a system of haves and have-nots. But on the flip side, you know, OCC may have needed some capital, and those were the ones who could step up to do it. So it's kind of an interesting scenario we find ourselves in as a result. So I could see kind of both sides of that argument, but it is nonetheless it is kind of interesting to see these issues brought to the fore now. So late to the party, so late to the game here on the old option block. But we got to keep rolling. It's time for my favorite segment. Time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird. Hope you like to get weird with us. And no, it doesn't get much weirder than our old friends, the mystery puts. We talked last about them on Monday and said it was a mystery put palooza. Just all sorts of puts hitting the tape on Monday. And following up today, Tesla is kind of unched right around 321, still well north of that 300 level that it was flirting actually south of last time we were talking about it. So those puts are on fire. And they're actually lighting it up pretty well again today as well. Start with our old friends, the 50 puts out in Jan 2019. Almost 500 on the tape already today. 69,000 open interest. You remember many thousands traded on Monday, and it looks like the OI grew substantially as a result. Let's see, pull it up here. Yeah, we saw 11,000 hitting the tape on Monday. The OI was 62,000. We got up to 67,000. So there was a little bit of back and forth, but about net 5,000 of that was opening, and we've actually added another couple of thousand since then. So yeah, it's been an OI increase of about nearly 8,000 contracts, over 10%. Just since our last show on these 500 hitting the tape today. They're about $1.10 at $1.15, so a wee bit cheaper than they were on Monday. They're about $1.50 or close to it back then. Also 200 of the quarter puts hitting the tape, and 2,114 of the 10 puts in January. Yes, that's this January 2019, 10 puts. So just for those of you out there aren't familiar with how puts work, if you're buying these, you want Tesla, or you're afraid Tesla will be below 10 by this January. So just 310 handles shy of where it is right now. 16,763 of those on the tape. Just crazy town. Let's move a little bit farther out here to 2020, where the 50 puts are kind of quiet today, only 22 on the tape. The 20 puts, though, the Jan 2020 20 puts, the hardest options to say in the whole business. 524 of those on the tape today. Those are $1.13 at $1.15. So they're right about in line with the 50 puts in Jan. So you could choose. You want 2020 20 puts or 2019 50 puts, right around the same price. You choose. 16,703 of those open as well. So a lot of activity, a lot of downside. Mr. Rocklobster, I was talking to the Meatball on Monday. He said he finally bought a one lot of these just to try it out, and it worked out pretty well. Have you been dabbling in the Tesla mystery puts as well, sir?
I have not. I have not recently. Mostly, I saw that vol blow up again. What is it on Monday? I remember all those puts going to like $3, $4, $5, something crazy like that. So, if you wanted to get out of them, that certainly was a good time to get out of them, because volatility did some pretty amazing things to those puts, I have to say.
It was amazing. It was pretty fascinating. You know, we talk about Delta all the time, but Vega in full effect here in these little itty bitty puts that could and have several times now. So it has been an interesting one to watch. Speaking of watching things, let's keep our trend alive. You know, with the show earlier, sometimes it's hard to have time to cull activity from today's X session because A, the session is only halfway over, so not a lot of stuff has happened yet. And then B, we have time. We have other shows. It's hard to collaborate all this and cull it all together in time. But we can go back and look at the archives, which is kind of fun for us because we amass these very large archives of trades that we analyze on the show here, listeners, and then we don't have a chance to go back to them. So we're doing some of that now, which is kind of good because A, we're cleaning out the archives. They were getting kind of full. And B, it's kind of fun to see if, as we always say on the network, the size money is not always the smart money, not even often the smart money. Let's see if we can keep that. Let's see if we get some winners today, Mr. Rocklobster. Let's see if we can go 3 for 3 on the show today. Let's start with a trade we profiled back on May 21st. This was a call roll in Union Pacific. At the time, the stock was around 145.60, and right now the stock is 149.62, but we're not looking at today. We're looking back a little bit. What we talked about back on May 21st was a roll, not out so much, but up. It was in June, rolling from the 150 calls. It went up 3,500 times for $1.10. And coming into the 152 halves for 68 cents. Looks like paper was sitting on some profits there because they rolled 3,500 into about 7,000. So 1 by 2. So it seems like they were keeping the party alive and also doubling down on said party. And that's usually a good sign you got some house money in your pocket. Let's go back and look at a chart of leading up to June, and we'll see if we could see what happened. May 21st, actually, yeah, the stock had been on a good tear. It was trading 133 back on May 2nd. By the time this trade went up, like I said, it was trading 144 and change. I got up to as high as almost 147. So clearly, they had some calls. They were sitting on some profits, and they decided to put them to work again, going up to the 152 half strike, and that perhaps is where their luck ran out, because in the near term, it seemed like this was a pretty savvy trade. They went up, I should say, a couple of strikes, and the stock went up a couple of handles. A couple of sessions after this trade went up, the stock hit a high of 148.33, and it seemed like things were good, things were on a tear, and then that was it. It never really looked back after that moment in terms of the lifespan of this option. It's doing well now, but this guy was a little bit off with his timing. Usually when you roll out and up. This guy just opted not to do that. He just rolled up. And at the end of the day, that looks like that came back to bite him because the stock pretty much never got up to that level ever again. The high was 148.33. Then they pretty much went lower from there for the entirety of this option's lifespan. And as of expiration on June, there were still 7,800 of these options open. So yeah, they went out worthless. So all the 7,000 that he bought for 65 to 68 cents in that range there, all pretty much gone. So whatever money he had made, a good chunk of it, perhaps all of it, actually has been given back to the option gods. They are fickle. We know that here on the show. So maybe a good lesson, and maybe if you want to buy yourself a little bit of time sometimes too, that's a good one. So far, it looks like we're 0 for 1. Mr. Rock Lobster, I know you're not a fan of just rolling up, Route. You like to roll out too, right?
I would prefer to roll out, taking the money, but it's like, again, you're still putting the dollars at risk. So, but for the most part, yeah, I think you want to buy yourself a little more time when you buy calls. especially for something like that. So I'm more of a fan of the roll out and up instead of just the roll up in the same term. Seems like you're kind of pushing your luck with that.
Yeah, this guy had rolled out to July. Looks like it still may not have saved him because it kind of got up to about 145 in that time frame. So he could have maybe gotten out for at least a more favorable level. But it didn't really hit in the money. But if he waited till after, if he rolled 2 months, that would have been a little bit more of an expenditure for him. If he rolled out to August, then yeah, it would have been all sorts of money in his pocket because these things got up to 151.5 and they gapped up about 8 handles or so. So it looked a lot better. Maybe even broke 152.5 briefly. So they would have looked a lot better if he had bought a little bit more time. Again, hindsight always 20/20, and it would have been more expensive. So I understand why he didn't do it. But sometimes, if you're going to roll, give yourself a little bit more time sometimes to be right on that. So far we're 0 for 3. So let's see if we can make it happen here with our second one. This one goes back to May 7th. This was what we termed at the time some furious bullish paper in Coty, C-O-T-Y. This is Coty Inc. They operate in four segments: fragrances, color, cosmetics, skin and body care, and Brazil acquisition. One of those is not like the others. Ticker symbol Coty, of course. Today, $11.70, kind of unched on the day. But we're not looking here. We're looking back to May 7th when we profiled at the time a lot of calls in the tape. In particular, there were the AUG 18s. 20,000 are nearly hitting the tape there. 14,000 of went up as part of a risk reversal for 54 cents against the AUG 14 puts for 40 cents. So he paid 14 cents for that net bullish risk reversal, and did that 14,000 times, but more calls went up. So either he bought more calls on a ratio, or someone else came in and piled in on more calls later. In terms of naked upside on the 18s, 54 cents or so. And again, kind of a similar theme to this one, super bullish. Everyone and their mother, at least in this trade, really looking for this thing to pop and pop hard, and pretty much didn't. That's a long story short. The stock, again, this is another period where the guy was kind of well-timed in the wrong direction. The stock was at its peak right around the time he put this trade on and never really looked back. Did briefly, right after this trade, looked kind of good for a couple of days. It hit a high of 17.10 on May 9th. That was 2 days after this trade. And then it never looked back pretty much ever since. And once again, all these calls went out worthless. 25,000 of them were still open on expiration, so not a good sign. The fact that he did the risk reversal may have helped him a little bit. Let's see, what levels did we get to by AUG expiration? Because those puts could have actually, in the end, he could have gotten himself some stock if he wasn't careful. Let's see, the stock immediately we said this trade went up on the 7th. There was earnings on the 9th. And the stock kind of immediately went into right after that, it spiked and then kind of immediately started turning around right after that and started dropping down to 14 and 13 and so those puts actually were in the money pretty quickly. He actually looks like he took those off. So this may have come back to bite him in a couple of ways. The puts he sold for 40 cents probably had to take them off for perhaps a wee bit more, and the calls he bought went out worthless. So this could have ended up being even more of a loser than it seemed here. Let's see. So the puts were closed, but the calls were still open, and we got down as low in that time frame. Actually, this included right about close to a second earnings cycle in there, and we got as low then as about 1073. So those could have been pretty ugly, but that was, I think, a couple of days past. Actually, that was still in expiration. So yeah, these could have left a mark. Mr. Rock Lobster, looks like we're 0 for 2 here, sir, with our trades. Our friend, I usually like a good risk reversal, but you got to be willing to take the stock or, do some dancing to the downside if that happens. It looks like this downside came into play for our friend in Coty, sir.
It looks like, this was one that, didn't they try to take over Avon moons and moons and moons ago?
Could have been.
Coty stock.
Is that part of the Brazil acquisition team?
I think they are. I think they were owned by some rich family. That might be the Brazil acquisition team. And then I remember Avon was part of their plan because Coty fragrances and stuff like that. And I remember seeing this type of paper in there actually quite a bit. So, but yes, if you put on a risk reversal, one must always be willing to take the stock because it is certainly possible that you might. Did you know that?
I learned that today for the first time looking at this trade, sir. I realized I could get the stock. That's why I'm getting all these juicy credits. I thought it was just free money they were giving me. I thought they were just nice. I thought the options god were generous. They had granted me a boon, but apparently not. There is no free lunch. Sometimes you got to take the stock, and it looks like our friend took the stock, or perhaps took a bit of a drubbing on here instead. So 0 for 2. Let's see if we can end on a higher note. Let's go here to our final victim here. This is back on April 23rd profile. This was some put action in CBL. It seemed pretty bearish even at the time. It was a lot of puts, 16,400 to be precise. By the way, CBL is a name that does about 3,000 contracts a day. So this was several times their usual ADV in this one put trade, except 2 half puts for 15 cents. Excuse me, paper gobbling up these on the offer there, or even a little bit through it. So aggressive paper to get a ton of puts on. At the time, back on April 23rd, let's see, where was the stock on April 23rd? It was about $4, $3.99. So the 2 half puts, someone perhaps a little bit spooked. That had some earnings baked in. Actually, I had a couple of cycles baked into it because there were earnings the next session. And the stock actually looked all right for a while there, and it rallied all the way up to, 6.25 back in June. Then they paid a divvy, and it kind of went back down again. And they had earnings on the 1st of August, I should say, and the stock sold off again. So now we're back to about 440. So it looks like the stock has pretty much, looks kind of unched almost since the last trade, but it actually had a big run. A long way around to saying these SEP 2 half puts, not really so much in play right now. They bought them for 15 cents, and they're pretty much worthless now. They're at a nickel. There's still 18,000 of these things open, so the whole trade is still open. It is worth noting that, again, the stock ran, so chances are someone's buying that many puts to the far downside. They probably are an underlying holder, in which case they probably were happy with that big run up to the upside. Hopefully they did something else, sold their stock maybe, hedged more aggressively as a result of that run up. Worth noting, there are 15,000 of the 5 puts and 13,500 of the 4 puts open, as well as 10,000 of the 6 puts. So maybe some other stuff has gone up in the interim there that we didn't get a chance to highlight. That is, I'm going to be charitable and assume that's the case. But at the outset here, straight up as these puts look, not so much. Mr. Meatball, take us home, sir. Mr. Rock Lobster, I keep saying that. What are your thoughts here on these? They were out of the money at the time, and even more so now, SEP puts, sir.
You know, I know why you keep calling me the meatball, because Gene says it's your birthday, and I think you're just getting senile because you're just getting so old.
That's what it is. The decrepit onset of age has hit me, sir. 27, 27, you're getting up there, you start, the bones start to ache.
Now that he's 28, it's all downhill.
And he does not look a day over 60 for being 27. I'll say that for sure. So I think this was a put in stock guy, to be honest. I think this was one of those, somebody just wanted to buy the put, why you'd buy your 2.5 level puts. I guess, you had a substantial amount of dough in it or something like that. But I just have to feel that somebody was buying stock with these junk puts. That's my feeling on this one. Because normally guys that buy that many puts aren't that wrong when they're buying your 2.5 strike. So that's what I would say on that one. That's what the spidey sense is telling me there.
My spidey sense is telling me my producer's ratting me out on my big day here, so I'll have to deal with that while we keep on rolling right on into the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the Strat Block, the portion of the program where Uncle Mike holds court here. We didn't have a chance to put up a poll. These early shows, sometimes there's no chance to get everything done in time for showtime. So, Uncle Mike, you are free. You are at liberty, sir. I hand you a hot mic. Have at it, sir. The floor is yours. What's up for today's strategy block?
Oh, man, I wish I could talk about pro wrestling again, but no. I want to talk today about just a topic. I was at a golf outing about a month ago, and the subject of investing in marijuana stocks came up. And so I want to give everybody my take on it. Long term, I don't think it's a good idea. Now, before I say that, I don't want to get into the morality of should it be legal or should it not be. I want to look at this just purely from the standpoint of an investor right now. So with that being said, let's go through the overall concept of it. Right now, medical marijuana is legal in many states. Recreational is getting legal in more and more states. But with that, it's still technically illegal at the federal level. So in terms of how that works, I have no idea. I'm not a lawyer by any means. So I'll leave that one up for the lawyers to decide. But with that being said, the first hurdle that marijuana stocks and marijuana companies are going to have to overcome is going to be legalization in the United States. Now, let's just say that that happens. So under this, let's assume that they get through the first hurdle. But in reality, with a Republican president and Republican Congress, I don't see that happening personally. But let's just say that it does. If it does get, marijuana does become legal. At that point in time, there's going to be two reasons as to why people would want to buy marijuana. Reason number one, because it's this cure-all. It's a great painkiller. It has these great medicinal benefits of it, so they say. The other reason, well, obviously, it's just to get stoned. So with that, let's say that it becomes legal and people they can smoke all the marijuana they want. It's just like beer, let's say. Now, let's say that all these claims of medical marijuana being this end-all, be-all, cure-all thing to help all these wonderful things is true. Well, how are drug companies going to make money on that? Well, okay, you can say that you'll need to get licenses through the government to sell it, and by doing that, when you get all these licenses from the government, you have to have special medical grade marijuana, and it has to be just the best marijuana ever to work for a painkiller. It's better than because of the opioid crisis that we have in our country. It's better than all of that. Let's just say that's the case. All right. Let's say that all of a sudden Johnson & Johnson decides to get into the marijuana business for purpose of using it as a drug, because all of a sudden there's all sorts of evidence-based research saying that it does all these things. All right. Now, with that, drug companies like Merck, Pfizer, or whoever, so let's just use Merck or Pfizer, maybe a better example on that. They make their money off of a drug that I can't make. What I mean by that is that on all of these drugs that these companies have, Mike Tusaw, I'm not able to really do much with it. However, with medical marijuana, now I have never grown any marijuana in my life, but with that being said, let's say that I have glaucoma, I have this disease that needs medical marijuana, and let's say that let's say Pfizer or Merck is charging an arm and a leg for it, and I'm poor and I can't afford it. If that's the case, then I'm just going to grow it myself. So from that standpoint, I think that is marijuana going to be a great thing from a business standpoint for a drug company or for just a local small drug company that does it? I don't think it is, because I don't think it's going to have a very high profit ratio on something that somebody can grow in their garden themselves. So with that being said, I'm not familiar with the onion industry. I'm not familiar with the tomato industry, but I don't know. I couldn't even tell you who the producer, who the nation's biggest tomato producer is or onion producer is. I know they exist, but they're a commodity. And companies don't typically tend to make money off of commodities the way drug companies make off of drugs. If one company could make a specific type of marijuana, then from a medicinal standpoint, okay, I could see it being something like that. But drug companies make money off of unique drugs. So from a medical standpoint, in the near term, I could see it maybe doing something, and maybe the novelty of it, maybe the excitement from the marijuana users, it could drive the stock up. But over the long term, from a medicinal standpoint, I don't think it's going to be that big of a deal. Now, let's talk about the people that just want to get high. With that being said, similar concept of it, all of a sudden marijuana is legal, and you have to have these special marijuana licenses to sell marijuana. And if you want to get high, you got to do it through go to your local corner marijuana store. Well, if that's the case, that's going to be taxed to high heaven if the government allows such a thing to, in my opinion anyway. And if that's the case, now I don't smoke marijuana personally, but if I really want to get high all the time, I'm just going to grow it myself. Or if it's legal anyway, what's to stop me from going and buying? And let's say that they tax it at 100%. And I'm just making up a number, but let's say that I'm a marijuana smoker and I'm a law-abiding citizen. If that's the case, and it's 100% tax on it, I'm just going to go down to the corner guy of my street, let's say, and just buy some from him. It's legal, and maybe it's illegal for the guy to sell it, but if someone's going to smoke marijuana, my guess, once again, I don't know, I don't smoke the stuff, but my guess would be that someone would either get it from the street corner guy that's selling it at half the price that's non-taxed. And on top of that, if it is legal and I really enjoy getting high and I really love that marijuana, I'm going to grow it myself. And if I can grow it myself, once again, I've been around the markets for a long time in my career, and I've been around capitalism. And, with that, I'm not in that world, but I couldn't tell you who America's biggest corn producer is, America's biggest tomato producer, onion producer is, because it's a commodity. And so with that, I think that maybe in the near term, marijuana stocks could do well, but as a long-term investment, you're investing in a commodity that someone can grow themselves. And I just don't see how big business, which is what a lot of stocks are going to make money off it. So that's my opinion on the marijuana stocks.
And I should say I misspoke earlier. Apparently, our producers are with it here on the show. They did post a poll before the show. I just missed it. So the poll this week was, should Uncle Mike talk about the S&P 500 after Labor Day? Why marijuana stocks are a bad idea for the long term, hence what he just talked about. Selling premium in a low vol environment, or the history of how the greasy meatball got his name. And actually coming into Showtime, Uncle Mike, selling premium in a low vol environment was winning with 36%. So maybe we'll save that one for a later show. And we shall discuss. We had a good one nonetheless, so that was a good one. Let's keep on rolling, though. Get some of your questions as it's time for a quick version of the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is a portion of the show where you guys take the reins. We ask you questions, you ask us questions, all sorts of fun question party palooza. This week we're asking you on Twitter here, what are you looking for? What are you looking forward to in addition to our upcoming crypto derivatives panel? Myself and Matt Amberson and a bunch of others, Tony Sleep, will be talking about all sorts of fun crypto derivatives this week here in Chicago. If you want to come, Voice of Blockchain will be there on Navy Pier on Saturday the 25th. Come join us. We asked you, what crypto derivatives would you like to see? Give you 4 choices. Next, Bitcoin options, Ripple options and futures, Ether options and futures, Litecoin options and futures. I believe all you guys on the panel here all voted for Bitcoin options, and that's where our audience is as well. 72%, very firmly in the camp of Bitcoin options. Ether options and futures, only 15%. Ripple, 8%, and Litecoin options and futures with 5%. You got a couple days left to vote on that, and then come see us on Saturday if you're going to be around. And if you're going to be at the conference anyway, come say hello. Like to chat with you folks all the time. Uncle Mike, you had a well-timed strategery block because you're talking about the cannabis stocks, and someone hitting us up today. This is right before the showtime. TradingTrooper saying CGC is beginning to trade weekly options today. He seems very excited about it. So I thought we'd check it out. I'm not familiar with CGC. Pulled them up. They are Canopy Growth Corporation, apparently knee-deep firmly in the old cannabis space. And this one's been on a bit of a tear, shall we say, of late. On August 14th, they were trading $25.79, and then today they're $41.54. So it's been a good couple of weeks here for CGC. I'll have to check out the news and see exactly what's been driving them, maybe an approval, legalization in a certain area, something along those lines. But he's interested in the options. Let's see what's going on from an options perspective out here. Actually does some decent paper. Does about 9,000 contracts a day. I'm guessing some of the recent run-up may have something to do with that. Looking at the OI, open interest is about 2.2 to 1. Calls over put, 66,000 to about 30,000. So again, when the stock has a huge run up, you're going to see some call bias. That's kind of there today as well. Actually, a pretty active day. About 23,000 contracts on the tape. 2-to-1 calls over puts today, and it looks like the weekly is doing some paper. They have AUG. It's 41, so the AUG 40 is doing well. Calls 40 halves, 41 halves, hundreds on each, all the way up to 55, which expire. These things expire in 8 days. Someone's picking up 15 of the AUG 55 calls, expired on the 31st. So go figure. Some call bulls. So yeah, it's getting some interesting paper. Looks like the majority of the action still is in the monthlies, though. 30s pretty active in September, and the 40 puts out there as well. So interesting stuff. I don't know, Mr. Rock Lobster, is this one that comes on the radar of the crazies in the pitch chat? And do you watch any of these cannabis names, or is the addition of the weeklies here to CGC as exciting to you as it apparently is to Trading Trooper?
Well, I guess that way, it's almost like the perfect, you think about it, you could smoke dope and then you could trade a dope stock to pay for the dope you smoke. Does that sound right?
Do you have enough of your wits about you, though, to make the money, or are you going to be hemorrhaging more cash?
Well, I think
those two things may not. It's like drinking and trading. Probably don't go together. Any sort of mood or mind-altering thing probably doesn't mix well with trading at the end of the day.
Well, I think the stock just goes up. So I guess, that's, I guess.
The stock is high.
I was about to say, it's a new definition of high. Weeklies generally mean that the stock has broken some volume level. To me, like the pot stocks, it's like any new industry where, remember the 3D printing industry was hot, and, take your pick on any biotech trend or any new internet trend, like whatever it is, right? So I think there's probably going to be a lot of heat. Let's call it smoke and heat with the pot stocks. And they could also be something that, maybe short sellers get in a little too early because they think they're getting ahead of themselves, possibly for the reasons that Mike, just discussed, as far as, well, they're, it's pot, right? They're going to figure out a way to grow pot pretty cheaply, pretty fast if it's legal. So almost paraphrasing Chris Rock, oh my God, I have all this crack. I don't know what to do with it. How am I going to sell it? So I'm sure they'll figure out a way to sell all their dope as well. So, but that stock definitely is starting to look a little squeezy. So you got the weeklies. I'm just going to guess there's probably more volatility to come in a name like that. But I'm going to start looking at it now that, once there's some weeklies and some liquidity, then it becomes more of a, an option trade and not just I'm going to buy it and see what happens. So
yeah,
so I can stick it on a list.
You can stick it on a list. There you go. I don't know what's driving this recent run up. Has there been some recent approval with this name or something that's made it effectively nearly double in the past 2 weeks? I'll have to go check.
Yeah, Constellation Brands just put $4 billion into it.
Oh, that'll do it. Yes.
Yeah. So with it, if you look at a chart of Constellation Brands, ticker symbol STZ, Sam Terry Zebra, you'll notice the same day that this stock started going up, you'll notice that stock went down fairly significantly. So it's kind of it's one to where they got a huge capital injection from a big company, and that's what's driving the stock up very clearly. So, with this, you can see what's happening with it. Constellation is trying to be like the first mover advantage, so to speak, because there are other beer companies that are looking to, and just so everyone knows, Constellation, I believe they make Corona, if I'm not mistaken, but there are other beer makers that are trying to enter this space. Molson Coors is, Heineken, and by doing this, they're going to be one of the first ones. I think they're trying to be first mover advantage. So they disagree with my outlook on marijuana stocks, apparently.
I was just going to say they should have listened to the strategy block a few minutes ago. They could have saved themselves about $4 billion if they had only listened here on the show. And really quickly, we'll end with a quick silly one. We like to be silly sometimes here. We like to tweet out stuff that sometimes is silly. And we tweeted out something along the lines of about Olive Garden adding a $300 all-you-can-eat pass Nothing to do with options, just being silly, I guess. And a lot of people seem to respond to this one. Volatility Trading said, low carb diets be damned, but my favorite response was from FContangotrader. He writes about a lot of our shows, writes into a lot of our shows. And he liked it because he thought there should be a greasy meatball and rock lobster combo coming up at option at Olive Garden. So what do you think of that, Mr. Rock Lobster? You and the meatball could be on the menu together, and you could eat it for $300 a year.
Of course, the irony would be is that we can't stand the Olive Garden, so they would make some sort of menu item based on people who won't eat there. So I would find that that is kind of funny, actually.
That would be your own personal version.
Only in America.
Your own personal version of hell. You'd have to go eat your menu item every week, and you have to buy this $300 all-you-can-eat pass, and you couldn't stand any of it. It would be fantastic. It'd be great. I would look forward to that future. Meanwhile, let's keep looking forward to what's coming up in the future. It's time for our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. It's where we talk about things that are coming up here on the markets and coming up into the weekend here. And I mentioned earlier in the show, we got some earnings coming out after the bell, so it's not done yet. Got Intuit, got HP, got Gap. And we've got Foot Locker tomorrow if you're into athletic shoe retail for all of you out there trading those. So there still are some names popping off later this week. But other than that, Mr. Rock Lobster, what's on your tape for the rest of the week, sir?
Looking at this China thing, if that does set off a catalyst, also, crazy rally in technology in chip stocks. I mean, NVIDIA looks like it's going to 300. That's another one. Citron, be damned. So I just think, there's some strength there, and just the damn low volatility in bank stocks and oil stocks, even low volatility in CMG. It's like, there's like nothing's ever going to happen. No E. coli break. I mean, it's crazy low vol pricing in there and a pretty damn high stock price. So those are things I'm looking at in general. Again, I don't think I see much from VIX until this China thing sort of plays out a little bit. I think this 12 handle is sort of our magnet for a while.
12 handle, eh? We shall see. We'll discuss it more on the Volatility Views program tomorrow. Before we go, Mr. Uncle Mike, sir, what are you watching for the rest of this week?
Well, I was hoping to say my trademark saying today, but perhaps that'll have to wait till Monday. But I'm expecting not a lot of movement in the markets this next week unless we have some type of a macro event in some way, shape, or form. And then after Labor Day, big money will start to either come into or go out of the markets again. So exciting September ahead of us, I believe.
I agree, sir. Unfortunately, we'll have to leave it there, listeners. But if you're sad, wipe that tear from your eye. The Rock Lobster will be leaving us. But if you can't get enough Uncle Mike, don't worry. Go get a beverage, relax, come back in about half an hour. Because he'll be joining me for TWIFO. We're going to go deep dive. I'm guessing if he's coming out, we're going to talk silver. Why not? It's fun. We'll also talk crude. We'll talk maybe some crypto, some other fun stuff, lighting it up. You guys got questions. We got answers. It'll be fun. Hedging the equity market with treasury options, all sorts of weird stuff in store. So stay tuned in about half an hour for TWIFO. If you're listening to the podcast, just look at the next podcast in your lineup because it should be there. You don't have to do anything. So stay tuned for that. But before we go back around the horn, let's go to the Rock Lobster. Sir, what is cooking in the land of the pit?
Options made easy. If you want to learn how to trade options, this will be our best. This is our best course Mark and I are designing for people that want to understand volatility, so you actually understand the nuance of how to distinguish between just buying and selling options, and actually understand to price real risk reward when you trade something. So you're not just shooting fish in a barrel anymore. It's probably going to be our simplest, but give the beginning option trader, if you don't make the money on this course, like I say that every time, but our clients do, you're crazy. So if you actually want to see how the vol surface and vol really plays out in option pricing, and understand how to buy and sell, options made easy. It'll start in mid-September.
mid-September. Check it out. In the meantime, head over to optionpit.com. Check out some of their course archives. Probably some good learning in there for you as well. Mr. Uncle Mike, at least till you and I chat again in about 30 minutes. So what's cooking in the land of St. Charles Wealth Management?
By all means, you can check out my website, stcharleswealth.com. We'll be having some events coming up in North Carolina in the next couple months. We'll be having another in-office event. More to come on that, but we're in the planning process right now, and dates are yet to be determined, but it is coming soon. And if you are looking for a financial advisor who is not afraid of the word data decay, give me a call, 312-212-3531.
What if I'm afraid of it? Can I still call you? Or does it not work that way?
Well, that's why you call me, because I am not.
There you go. That would be good. That would be a good use case. Check them out, stcharleswealth.com, to learn more. And on behalf of Uncle Mike and the Rock Lobster and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing. All the fun stuff that you do. And if you're listening live, we'll see you back here in about half an hour. Otherwise, we'll see you back for more next week of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.